Overnight, China released the latest trade figures, jumped by 11.3% while economists were expecting an increase of 10%. Rose by 14.1%, and that compares to the 20.8% growth that economists were anticipating. It is impressive that exports topped forecasts given that U.S. tariffs on Chinese steel and aluminium kicked in last month. The massive trade surplus that China has with the U.S. is one of the reasons that President Trump instigated the trade spat, and dealers will be keeping an eye on developments. Yesterday, stocks bounced back as the fears regarding a trade war subsided. The absence of harsh words from the U.S. and China encouraged traders to step into the market and snap up stocks. Investors are getting used to the pattern, whereby equity markets can recover after a big sell-off that was triggered on account of trade tensions. In keeping with recent trends, the U.S. indices held up better than their European counterparts. They hit its highest level since early March and they hit an all-time high. Dealers believe the U.S. is in a stronger position to weather the storm than the rest of the world, and that is why the U.S. equity benchmarks are outperforming. Steven Mnuchin, the U.S. Secretary of the Treasury, revealed that many of the trade talks with China have broken down. However, he confirmed that China is very important in cooperation with North Korea. The remarks suggest the U.S. doesn't want to be too aggressive with Beijing, which is also giving investors hope. In the U.S., and jumped to 2.9% and 2.3% respectively. The headline inflation rate is now at its highest since early 2012, while the core figure is at a level not seen since January 2017. This steady increase in demand could bring about 2 more from the Federal Reserve this year. From the June Fed meeting were released earlier this month, and they cautioned that heightened inflationary pressures could bring about an economic downturn. Had a lackluster session yesterday, which is concerning given how much it dropped on Wednesday. Fears of weaker future demand because of the U.S.-China trade dispute, coupled with news of increased supply from Saudi Arabia, and plans for Libya to boost exports all contributed to the slump in price. Despite the relatively low price, demand was subdued. Today at 8 a.m. UK time, will release the latest inflation figures, and economists are expecting an increase from 2.1% in May to 2.3% in June. Keep in mind that yesterday held steady at 2.3% while the dip to 2.1% from 2.2%. Next week the will release the figures for the region, and the will give us an indication of actual demand in the currency bloc. Has been edging higher since late June, and a break above the 1.1850 area could pave the way for 1.2000 being tested. A move below the 1.1510 region could put 1.1400 on the radar. Has been in a downward trend since April, but it has been creeping higher recently. A move through 1.3315 could bring 1.3472 into play. If the wider bearish move continues, it could target 1.3049. Has been in an upward trend since mid-April, and if the bullish move continues, it could target 0.8900. A pullback might find support at 0.8785, the 100-day moving average, and a break below 0.8785 might bring 0.8725 into play. Has been pushing higher since late May, and if it can hold above 111.39, it could pave the way for 113.57 to be targeted. A move to the downside might find support at 109.37 to 109.19 area. Is expected to open 40 points higher at 7,691, is expected to open 63 points higher at 12,555, is expected to open 25 points higher at 5,430. Disclaimer: CMC Markets is an execution-only provider. The material, whether or not it states any opinions, is for general information purposes only, and does not take into account your personal circumstances or objectives. Nothing in this material is, or should be considered to be, financial, investment or other advice on which reliance should be placed. No opinion given in the material constitutes a recommendation by CMC Markets or the author that any particular investment, security, transaction or investment strategy is suitable for any specific person. Original post.